3 weeks ago, my altcoin portfolio was down 75%, but now it's back up to minus 50%, which means I doubled my altcoin portfolio despite the fact that the markets are absolute garbage. And in this video, I'm going to show you every trade that I've made, the reasoning behind it, and my full strategy going forward in the upcoming months to come when it comes to my altcoin portfolio. Let's get started. I've made multiple trades within my portfolio which were necessary because some of my assets were running upwards in terms of value, and therefore the risk in them has become too high. And the markets have become more complex, which means that if the markets are turning, the money and liquidity in the markets won't be turning into everything in the markets. It's going to be concentrating within a few of those assets. And that brings me to the strategy that I've been deploying over the past few months, in the reasoning that I've been continuing to buy altcoins in order to be making back the losses that I've made. And I think it's very resonating for you to look at my altcoin portfolio, because I've heard a lot of people are in the same circumstances right now. Many are heavily underwater. Actually, many funds are heavily underwater at this point. So that's why I keep on providing the content through this journey where I try to be making a strategy to be getting back on my feet as soon as possible. And one of the concepts with that is that if you look at the altcoin portfolio here, we have been buying add-ons or DCAing since the 1st of February. Markets were collapsing, and that's when I decided this is the moment that I want to continue deploying capital, as I think that the markets are going to be ending in terms of a bear market, and from here on we're going to be accumulating again, or perhaps we are actually going to get a bounce that I can start making a return from. So as you can see here, we have been adding $10,000 every month. I've actually done an extra one on the day that Bitcoin bottomed. And if you look at the mutations, you can see that I've been using this capital mostly to be buying near, especially on these levels that we saw here. And that I've also been using that capital to be buying into Tau. As you can see, we have been adding a little bit there. I've been adding other positions as well. But primarily, I've been starting to accumulate a position of $20,000 into near. And as you can see, as a slight overview already, we have been taking out $23,000. And at this point, we are still holding $19,000, which means we have a profit of $23,000 on near. And if we start looking at the chart itself, these were the levels where I started to be adding into near. And that is where I wanted to start compounding this entire position, but also be using it to be bringing back that portfolio. And I think that we've seen a tremendous return within the portfolio, and I'll continue to be adding the $10,000 for at least the coming few months. I will stop with that later this year. But we can see that by doing the DCA, I'm actually back up towards $90,000 on my portfolio, which is a drawdown of less than 50%. And as you know, altcoins have a lot of volatility, but it's easier to be making back less than 50% than when you're down 80% or 75% as I used to be. Now, if we look at the fact that I've been buying near here, I've been using the recent run-up to be scaling out of the position. And I'm using two very important techniques for that. One is the difference or the distance between the moving average on multiple time frames and the current price, which we call a sigma distance or sigma variance. And the higher the distance will be, the more likely it will be that the markets are going to be mean reversing back towards the moving average, which is then classified as the fair price. So if it goes down way more than the moving average goes down, you will often see a case of the markets bouncing back up towards the moving average, as you can see in the example here. This was the 5th of February. In the opposite, you can see that we have been going up, and the current sigma volatility or variance that we have seen is the same as me being hit by a thunderstrike somewhere in my life, which means that it's not likely that this happens, which then means that you need to start taking profits. And that's what I've done. This strategy also resonates with the RSI levels that we can see here. Breaking through the 70 level doesn't automatically mean that you need to start selling your position. As you can see, we were just breaking out and it hit the 70 level. But once it starts to hit the 90 levels and it starts to accelerate even more, that's when you need to start getting out of your position when it comes to NEAR. And that's what I've done, because in this stage of the markets, it's not expected to continue the run or to see an even bigger run, except for a Zcash, of course. But it's very more likely that if Bitcoin is going to correct, that all these altcoins are going to go down even more. And that's why you need to be able to be flexible with your position and to be able to be selling that position, even though fundamentally I'm a strong bullish case or a strong believer of NEAR being one of the core assets for the upcoming bull cycle to be in. But in between, you will have multiple corrections of between 30 to 80%. And I don't want to stay in that position, given the fact that the risks of holding that position have significantly increased with the macroeconomic environment just constantly changing and becoming more risky. So that's why I decided to basically sell the position partially, but I've also decided to be doing something else with it. So now it's time for my full strategy in the period to come from here, why I'm going to continue deploying into the altcoin markets, but also why I've been selling NEAR. I'm sorry to stop you here for a second, but this episode is brought to you by OKX, our partner, and they just had their biggest announcement, which is futures are back in Europe. It's called Xperps, which is a fully regulated platform within Europe to trade futures in crypto, which we haven't had for the last 1.5 years. You can use all the crypto that you have on your exchange as collateral to trade those futures within the platform. And the best part, the liquidity in the books is matching with their global engine, which is the global markets on OKX. And you can actually use the collateral in the hedge mode to hedge your positions and therefore still generate the funding rate that is on the exchange available. The best part, if you sign up today, you get $36 in free if you are in the first 10,000 users that sign up, with the link beneath in the description. Now let's continue back to the episode. The altcoin portfolio has gone up to $90,000, which means that as it's currently the 31st of May, tomorrow I'm going to be doing another DCA of $10,000, which then means that if you want to stay updated or if you want to follow me on my decision making, make sure to go to Instagram or X, where I will be posting this immediately, because in the recent posts I've described exactly what I've been doing with my trading and what I will be doing here. So one of the first examples that I want to bring is that on May the 25th, I've sold 20% in NEAR at $2.80. And I've basically explained everything that I've just been saying, in the sense that it became too risky in the short term to be holding that position. And you need to ask yourself, if it is going to continue to run, how far can it still overstretch? And given the fact that I've just said the comparison with the Thunderstrike being hit by one, the chances of that to continue to go up is just really low, which then means that you need to start trimming off, also because you will be facing opportunity costs. And the reason for that is that it might be that NEAR goes down in terms of valuation of price prediction, so it can go down to like 30% from there, and other assets can actually outperform, and that is actually the case. So in the short term, what is the expectancy of NEAR to continue to go up? Yes, it might be running up another 10 to 30%, but the chances of it doubling again is near to 0%, especially since it went up by 170% already. But what are the chances that the liquidity that is being created in that asset and the profits that are being made in that asset are going to continue moving into the ecosystem, especially within AI, but also other layers that are picking up momentum? That is actually significant. So at this point in time, I decided to sell NEAR and move it into other assets. And as you can see here, I've actually been using it to be buying some SAI at 6.3 cents. I've been buying some Wormhole at 1.2 cents, and I've kept some in cash in order to be buying the dip if the markets provide such a dip that I want to get into it. Secondly, the day after, I decided to sell even more because my position was still 35 to 40% of my entire portfolio, which is too much at that point in time. And that's why we came to the conclusion to be selling $22,000 or $23,000, which is the full profit that I've made. And we're just back to the initial investment that I've made. So I've taken all the profits off the table and I've used that to be buying other assets. As you can see, I've sold another 1900 NEAR for 5.6k, and I've bought some more Wormhole, and I've bought some more SAI, which has actually been the right play given the fact that NEAR has been going down 25% since then, and SAI is up, I think it is around 8 to 12%, I don't know it exactly, but at least we have made the right decisions, and this is one of the reasons why I continue to be doing this, especially if you look at NEAR versus Bitcoin. Again, we've seen this expansion, we've seen this breakout. With any of the corrections that take place, you want to be buying back into the dip that comes. So the liquidity that I have for NEAR is going to be deployed in the area between $1.60 to $1.80. Until then, I'm not going to be touching it. Even if it bounces back from $2 to $3.50, most likely I'll be scaling out of the position even more when we get there. But we are not going to be deploying unless it's so obvious that we want to get into that position. Similarly, if we look at other assets in terms of price action, we can see that NEAR has been making this breakout, and SAI is just on the edge of starting an uptrend and starting to be doing well, especially since for the first time in a long period of time, we see liquidity coming in and there's a lot more volume being traded into this asset, which we can also see on the USDT pair. So we start making an uptrend here, which then makes it very likely that if you look at the scope of things and the trend that we've seen, that from here, SAI is going to be making back this entire loss that we've had. So even if it goes towards these highs, it's already a double in terms of price value for SAI, which if you look at this chart, is very unlikely for NEAR to be hit in the short term. Which then if I take the profits from NEAR and I move that towards SAI and I double again and I start taking profits on SAI there, my portfolio is back up to 110 to 120k. In the coming run that I'll be seeing on those altcoins, my final strategy will be to be allocating less towards altcoins and more towards Bitcoin, because I think that the run will not continue all the time. There will be a period that you need to be looking into Bitcoin and cash even more to be going risk off or to be de-risking yourself a little bit. And I think at the end stage of the rotation, it is time to be deploying more into Ethereum. But for now, I want to stay fully allocated into the markets. That's why my current allocation is that SAI and NEAR are both my largest positions. And then I have Tau. And then closely after that, we got EigenLayer and Wormhole coming in, which I think that if the rotation starts to happen, it's very likely that these assets will even yield a higher return than we've seen with NEAR. And that's when I'm back in profits. Make sure to follow me on X and Instagram, and also make sure to subscribe to this YouTube channel. Ciao!